This meeting is being recorded.
Everyone, apologies for the few minutes delay. And welcome to today's Payments Association webinar, Exploring Myths on APP Fraud and Understanding Where We Are, a webinar with the Payment System Regulator. My name is Ricardo Tordera, Policy Director and Government Relations at the Payments Association. Before we get started, I just wanted to remind you some quick housekeeping. You can submit questions to today's speakers by typing your question into the Q&A tab of the control panel. You can send in your questions at any time during the session. You can ask questions anonymously if you do not want your name attached, but please be respectful. Please only use the chat box for commentary, not for questions. If you have any technical issues, feel free to send a message through the chat box to Christina from the Payments Association. This will be recorded and available on demand within the next 48 hours. Please add any additional insight on your thoughts about the topic here. This topic has been front of mind for the industry for many months, and we at the Payments Association have been following developments closely. This webinar will explore the results of our recent survey on what PSPs think will their impact on the organizations, as well as give the PSR the opportunity to respond. I would also like to introduce you to our speakers today. We have David Parker, Lead Ambassador at the Payments Association, who will lead today's webinar. David, alongside Chris Hill, Partner at Fox Williams, will discuss with Kate Fitzgerald, Head of Policy at the PSR. I hope you find the session valuable, and over to you, David. Thank you very much.
Thank you very much, Ricardo, and welcome everyone. And Chris is just turning his camera on as well. As Ricardo said, and we'd like to stress, we have a nice set of questions, and everyone knows I ask nice and easy questions. So we have nice, easy questions for the PSR, and we look forward to your questions coming in on the chat that we can then also put them, and we will leave time for it. We're going to kick off though with just a few slides from I believe Kate, you're going to lead those on from the PSR, just really summing up where we are. And also, I think quite importantly, what the original objective of the whole process, and we're all talking about here in terms of push payment fraud, what the objective of the actual regulations were, because it does cover some things, but it doesn't cover other things. I think it's very clear what it does cover, and therefore that we keep that in mind as we go through things. So with that, Kate, I think I hand over to you now for a couple of slides. Perfect.
That's fantastic. Thank you, David. Now, I'm just going to double check that you can hear me and that you can see me, because I've had a few little tech issues this morning. But as long as nobody shouts, I'm going to rock straight on with the slides, if I may. So, yeah, I'm going to talk a little bit about, first of all, just a tiny bit of scene setting to remind everybody around the scope of our policy and some of the key elements. And I'm going to particularly focus on some things which might become important, because David very kindly has given me a bit of a sneak preview of some of the tricky questions that might come up. So hopefully I can set the scene around some of those as well before we start. So if we could possibly flick on to the key elements of the policy, which is the next slide, I think. So just a very quick reminder, and many of you will be very, very aware of these key elements around our reimbursement requirement that came in on the 7th of October. And many of the things we're going to discuss today will indeed relate to some of these particular points. So the maximum level of reimbursement being 85,000, the sharing 50-50. You've got 13 months to place a claim from the last payment. And we're going to talk, I think, today a little bit around gross negligence as well. So hopefully there is nothing on here that's taking anyone by surprise. But I do just want to point out the one on the bottom right, which is around payment initiation service providers. And just call out, because this is something we have a number of questions about, that all PSPs who handle funds are in scope. And we'll be talking a little more about relevant accounts shortly. Flicking on to the next slide, thinking about whether a particular transaction could be in scope of our reimbursement requirements. We ask, and we've documented some key considerations, and this is a very, very summarized level of those key considerations. So it's intended just as a recap and a summary, but I'll quickly go through it today. I would encourage everybody to look at the detailed policy though, because there may be some things which aren't quite clear from this level of general summary. So it is only an app scam if the recipient is not who the customer intended to pay, or the payment is not for the purpose the consumer intended. And that's super important, because one thing that definition does is differentiate it very, very clearly from seller disputes. So we are not expecting where you've got a legitimate merchant but a problem with the goods. We are not expecting our reimbursement policy to cover where there is a dispute between a merchant and a consumer in that case. That's important, and we will talk about that in a second. In order to be covered by a policy and be reimbursable, the payment does need to be executed through faster payments, or indeed CHAPS. Sorry, we should have put that on the slide. CHAPS is in scope as well. It does need to be authorized by the consumer themselves, otherwise it's unauthorized, different regime. It does need to be executed in the UK by that payment services provider, and it does need to be received into a relevant account in the UK that is not controlled, by the consumer. So, so thinking about these considerations, super important, and super important that we make sure we're really clear on the scope every time we look at individual cases. And I know, David, we're going to talk about some of the kind of more complex areas where it's important to be clear as well. I think those were the key things I wanted to clear out on the policy, but I did just want to give everyone, before we start the discussion, a quick update on how we're doing since implementation. So we'll flick onto the next slide if we may. So since the 7th of October, when our policy went live, everyone has worked incredibly hard, and we have been really pleased, and huge thanks to everybody who has made their organisations ready, who has worked with Pay UK and indeed UK Finance if you're on the BPS system, who has got their teams ready and understood the requirements. Because actually what we've seen is a really nice, quiet, calm implementation, and that's exactly what we wanted to see, and that is exactly down to how well everybody has prepared themselves for that 7th of October date. Now, we're watching very closely. So we are having very, very regular touch points between ourselves at the PSR, the Pay UK, who are running the RCMS system, and indeed whose rules this requirement is written into, and UKF, who are running the BPS system. We've seen really good system stability. We have seen some minor data or system incidents exactly as we expected, and those have been quickly fixed. So we're comfortable that things are being turned around without impacting firms materially. We've seen a steady flow of case volumes. It's been absolutely within the range of what we expected, and we haven't seen any spikes. So we're very pleased to see that, because I know that there were some concerns about that earlier in the day. So that is great to see. We are seeing a continuing reduction year on year and our requirements, even though our requirements have brought in new firms, we are still seeing that trend tracking downwards in fraud. And that is what we're all here for. That is exactly the purpose of all of our requirements, which are to prevent fraud from happening in the first. So having said all of that, and looking forward, we do intend to carry out an independent evaluation in 12 months, because we think when we formally assess the policy, it's important that we have adequate data and observations to do that. However, having said all of that, we know it's also important that if there are significant issues, we may need to revisit elements of the policy. And we already know that one of those that people are asking for more clarity on is the customer standard of caution. So that's already on our list. And it's already something that I'm talking to the team about, and we'll decide how we can help to bring a bit more clarity on the customer standard of caution into 2025 in the new year. So part of the purpose, I'm hoping, of this webinar is to drive out some of those things. And if you are seeing things that you think the PSR ought to be aware of, and we may touch on them in this call, then we're always very, very happy to hear about them. David, that is all I wanted to say, actually, on the slides. So unless there's anything you think I've missed out, I'm really happy to go into the questions now.
Great, thank you very much. Right, let's move on. Chris and I are going to sort of take it in turns to ask the questions. So let's start off by looking at the 85k limit, Kate, if that's all right, because there's been a lot of talk about it, and really, is there a real understanding of what it means? In other words, is the maximum amount the consumers can claim 85k, or how do they get more? Or could you just maybe explain really simply, for someone like me, what does the 85k limit mean?
Yeah, sure. Absolutely. And, we did do a consultation, shortly before implementation. So in the summer and autumn this year, in reducing this limit down to 85,000. So hopefully that has been well received. But let's talk it through. So it is true to say that under our policy, so under the reimbursement policy specifically, the maximum reimbursement that a consumer can get is 85,000. But that doesn't mean that there aren't other ways that they could get more than that. And I'll come to those in just a second. So if as a PSP who received a fraud, or you are being asked to provide the 50% reimbursement, the maximum you will ever have to provide will be 50% of a maximum claim up to 85,000 minus the any excess that has been applied. However, because clearly the Financial Ombudsman Service can consider claims of a higher limit and may indeed consider claims over 85,000, we are aware that some banks and some PSPs are today already saying to their customers, we're going to reimburse in full, even though it's over 85,000. Now, that doesn't change the position for the receiving firm. The receiving firm still only has to do 50% of the 85,000 as a mandatory piece. But because the FOS is often quite likely to award in favour and against the sending firm, some sending firms are just taking the decision that it's better for them just to reimburse more than the 85 upfront. That is their choice. That is not what's mandatory under our policy. So David, has that helped to clarify a little bit at least?
Yes, and I think we've also actually, I am going to jump in here. We had a question come in on the question. I know Ben's answered it, but I think it's worth everyone hearing. Is the purchase and selling of goods on marketplaces come under this as well? So that was just a quick, I think it comes into this sort of area of the limits and everything else. So marketplaces, Ben's just gone back and said, certainly does fall in. That's my understanding, yes?
So, sorry, I'm not sure I can see the question you're talking about, but yes, so anything that is within the rules that I just talked about, if it's over FPS or chaps, and if it's into a relevant account from a relevant account, then yes. So if it is a purchase on a marketplace or on a platform, that is, as long as it's a fraud. So I will just go back and emphasize, if it's a fraud. So if it is just a dispute between a seller and someone who, say, received the goods late or didn't like the goods when they got them or had a problem with the goods, that's a different thing. So if it was a fraud, so if it's someone who set themselves up as a fraudulent merchant on the platform, then that could come within the scope of our rules.
Okay, I think that's really clear. Next question. We can move on.
This one's me. So, Kate, got a handful of questions here. These are all about situations that David and I, between us, have come across in the market where you've got more than one PSP involved at some level, or more than one entity. It's about the collateral and mechanics that are going on in the background. So that this first one, we've got a payment being made from bank A to bank B, push payment over faster payments rails. That has been facilitated by a PISP. Fraud is then claimed. And so the rules kick in. You've got the 50% being shared by each bank. The oddity in it is that we're seeing the PISP, who is working for the merchant, which I think in this case was a gambling company of some description, going to that merchant and saying, actually, I need to collect quite a lot of collateral from you because I think I might have the bank coming back to me to claim that. So what's your reaction to that in terms of how that would apply?
So, Chris, thank you for raising that one. And these are the types of things that we as a competition and economic regulator are going to be quite interested in if there are things which are sort of impacting the way firms access the system, because having access to the system in a fair way is very relevant for us. So thank you for raising this one. I mean, it's very difficult for me to comment on individual cases, but from what you've told me, what I think you're describing is a situation where a PISP has onboarded a merchant who, let's assume, isn't a fraudulent merchant, is a genuine merchant doing genuine business. And the PISP who has onboarded them, I'm assuming, would have done some due diligence to check that they are a legitimate merchant. And therefore should be thinking to themselves, right, what's the risk profile? How likely is it that I am going to get on the hook for a claim against this merchant? Now, if I am a bit worried that this merchant could cause some difficulty and some liability, then it is likely I'm going to try and agree some contractual terms which make me feel more comfortable about the level of risk that I'm taking on. But I would just refer back to my point earlier, which is that seller disputes, so things around the goods not being liked, not working, those are out of scope of our policy. So I think here, I'd be asking some questions about, is it likely that this merchant is actually going to cause fraud in the system? And what is the legitimate reason, therefore, the need to place liability or place collateral to cover that? Now, we haven't heard about any of these cases ourselves at the PSR, but we are very interested to learn more if this is creating some kind of a problem. But we would want to dig a bit more into the detail. We would want to understand a lot more about what's going on here, what assumptions are being made, whether actually the policy is being used legitimately, and whether there are any access problems there. So very keen to hear more and more detail about specific cases, and please do come to us if you want to talk about any of these.
Thank you, sir. it's worth moving on to the second one. This is what I've seen in a handful of cases with a number of different, particularly e-money issuers, where they are using the distribution agency model to allow fintechs in particular to piggyback off their licenses. So what's happening is you've got an example we've got here. You've got a payroll supplier, so a fintech of some kind that is unregulated, is using a banking as a service provider. So yeah, an EMI is using the distribution or agency model to operate its business, and the EMI, the BaaS provider, turns around to it and says, actually, we need a lot of collateral because we think that there's a decent chance that there's going to be fraud going through this system. It's going to be very, very expensive. So the fintech, and I've seen this with sort of very early stage fintechs as well, which is potentially sort of an access and innovation issue, which I know is something we're going to be talking about later. They're told to kind of stump up a lot of cash that they maybe don't have, or just turn off the faster payments access rails and revert to cards instead. That I think potentially is causing a bit of an access issue. We chatted a little bit about this before, and you had some sort of very good points on around this. So, what's your reaction to that scenario?
To be honest, similar to before, I would really want to understand some more specifics around this and really understand what is going on in terms of, trying to shift that particular risk. What is the risk? Why are there, particular liability arrangements being put in place? Operating in a payment system is risky. That is part of the business that we all do every day, and it's really important that our policy is driving out, good outcomes in terms of helping people to manage that risk and make sure that fraud isn't entering the payment system. But obviously we are expecting that everybody who does onboard customers is doing some due diligence to double check that they are comfortable that they are onboarding people who are legitimate into the payment system. And that should go a long way actually to mitigate some of the risks. So I am really interested to hear more about where actually, some of these situations are arising. But again, sorry, I just can't comment on the detail without knowing a lot more about it.
Sure.
Hey, silly question. Where should people get in touch with you? Because, Chris and I have both got merchants and EMIs that have got these case studies. They'd love to talk to you, some of them. How and where is the best place of them reaching out to the PSR to say, hi, we've seen your webinar. You've asked us to reach out. Okay, here we are. Let's talk to you about our particular situation and what we're seeing. Where do you want them to come in? How? By an email? Well, what system works best for you?
So an email into our contact us email box is probably as good a way as any to start. Hopefully, if Ben's not comfortable with that answer, he can direct us in a different way on the chat. But that would be my straightforward.
Do you want anything put in the subject header of that so that they know they're coming for you? Do you want to say something like?
Yes, that it's relating to the reimbursement requirements, if that's a particular policy that it's
well, it's collateral. It's the collateral. I think that's the key thing. It's the demand for collateral that we're seeing across so many merchants and everything else, and it's causing people, as I said, Chris has seen it, I've seen it. Some people are just turning off, open banking, basically, faster payments, which is the last thing you and we all want to see happening, because they're just turning it off because they're saying, we'll just go back to using just cards because it's better and it's more effective. And it's not the result we all want to see happen from this legislation or regulations. And I know it wasn't the plan for it. So I'm keen, therefore, to get the people we're talking to write into you and explain actually what they're seeing. And I assume that's all done confidentially. Yes, that would all be done on a 100% confidentially basis. Yes.
Absolutely. And you're absolutely right, David. I can't emphasize enough what we're trying to do is get risk out of the system. And one of the reasons we're so keen to do that is because we think that faster payments can really create competitive tension by competing with the card scheme. So we want it to be on an equal footing. Now, everyone will be aware that if you operate in Visa or MasterCard or any other card scheme, then actually there are liabilities at play and chargeback mechanisms already in that system. And actually that's more the model that we want FPS to move to, because we want the risk to be controlled so that it can compete effectively with those other payment systems.
I think the challenge is that what I'm hearing from merchants is that with a card scheme, the card scheme effectively acts like an arbiter. Okay, so there's an independent party in there. What they're seeing with this demand for collateral to some extent is, well, they just got told, yes, the two banks or the two PSPs have accepted it, money comes out from you. And they're going, yeah, but what happens if we disagree? Well, that's tough. They've got no independent party to go to, where at least with a scheme thing, there are banks involved, but there's an independent party sitting in the middle that they feel at least will protect them to somewhat. And I think that's some of the challenges around this.
So that's very interesting, and that actually would be a really helpful thing for us to understand more about. I mean, our view of this is that Pay UK, as this payment system operator, should be playing a very similar role to Visa and MasterCard in looking after these roles and understanding whether, there is any escalation of disputes or arbitration required. But this is an evolving picture, right? And we're very, very aware that putting the reimbursement requirement as a relatively, let's say, blunt tool at 50-50, over time it is likely to need to evolve into a more, nuanced position depending on the specific facts of the case. And we've always said that this is a first step. So, David, we're super interested in some of those thoughts that you have about how this could evolve into a better way of managing risk.
Well, we've just had a comment come through on the questions already, exactly saying that this is exactly their concern. So, okay, so the key thing I'm going to say out to the merchants out there is PSR have been very open about this. Please contact us. It's 100% in confidence, and talk to us about what you're seeing in terms of collateral. So at least we're aware of it, and then we'll maybe have a discussion and take things forward, but we'll continue evaluating how this gets solved and how it's best handled. Is that a fair comment? Right. Okay. Let's move on to the next question. Nice, easy one, I'm sure. Next.
So Chris, actually, it's the previous one, 3.
Sorry. Yeah, apologies, 3.
Yeah, so it's in a similar vein, but slightly more nuanced in terms of how the policy works. In this case, you've got a sort of a string of PSPs. You've got the fintech is actually an EMI in its own right, and it's holding the consumer funds. It's using a BaaS provider, which is also regulated for scheme membership and faster payments access, and they in turn are connected to a high street bank for faster payments access. So where does the liability sit if there's an at-fraud claim?
So my suggestion on this one, again, I can't sort of be super drawn into the details, but I do think that our rules clearly spell out where the relevant account is deemed to be. And, that is something that we are clarifying, which might help in this case. But we're looking hard at the point at which the funds move from a consumer into an account that's not in their control, but is a relevant account in that it is a payment account and under the terms of our description of a relevant account. But again, sorry, Chris, I can't comment too much on the sort of very detailed scenario that you've outlined, but clarifying and looking hard at that, what the relevant account is, and indeed what an APP fraud is, I think might help to solve this question.
In any case, it's sort of relevant to the collateral point as well, because regardless of where the at-fraud technically sits, it's likely that market practice will evolve into that liability being passed up the chain back to the person who's asked for access to the system, I think, on behalf of someone else. Okay, let's move on to the next question. This is about vulnerable customers. So it's a concern I've seen coming up in a handful of places. Obviously, you've got the consumer standard of caution, which is essentially gross negligence, but that exception doesn't apply for vulnerable customers. Doesn't that mean that PSPs are likely to look at vulnerable customers as a category of customer that's a bit too risky? So for those, they'll either be more inclined to refuse them access to an account, for instance, take them on as a customer, which has sort of financial exclusion consequences, or alternatively to say, actually just not getting access to faster payments? Or are there other mechanisms that they can use to deal with that risk in respect of vulnerable customers?
So what I would say here is that firms all have responsibilities towards their customers, and in particular towards vulnerable customers. And that includes under the FCA's consumer duty, which I think is really important here. And our reimbursement requirements do not change the responsibilities that firms have towards their customers. So the FCA has been super clear on this, that it will be monitoring closely how firms implement and respond to the requirements in that context. And we will be looking very closely as well. We will be sharing data and insights as appropriate. And, you know, frankly, this is the kind of thing that we would be looking out for in terms of making sure that vulnerable customers, one, are being treated well in the case of a fraud, but also aren't experiencing any secondary consequences. And I would imagine this would be referenced in our evaluation as well. So it's a really important point. It is one that both the FCA and the PSR will be watching very closely.
In respect of those vulnerable customers right now, so you've got a PSP that for instance, is targeted towards a group of vulnerable customers. That's potentially a very big liability for them. What sorts of steps are they, in your view, allowed to take to reduce that risk in terms of, and we've got the delaying of payments, for instance, what else? If you've got a PSP that's convinced that actually this is a fraudulent payment and you've got a pensioner saying, no, I'm sure this is genuine, what can they do?
In my view, they cannot send the payment. And again, this goes right back to the very, very purpose of the incentives we're trying to appeal to here. So if, as a payment services firm, you have a view and you have sufficient belief that a customer is being defrauded, then you don't send the payment. And that's a really important thing that people, need to be able to do to mitigate the risks themselves as firms in the system. But I wouldn't expect the treatment of a vulnerable customer in this situation to necessarily be different to any other customer. And I would expect firms to take the same level of caution in understanding any payments that don't look appropriate or that look very high risk. We want them to intervene. We want them to check. We want them to talk to the customer about the experience, about the rationale for the payment. And that's why we talk in our rules and in our guidance about, very specific targeted interventions. And that's what we want to see here.
There's obviously.
Sorry, go on, Chris. Go, Chris.
So there's obviously a big resource requirement in doing that, which I'm guessing is part of what you want the policy to be doing, is directing resource towards more targeted intervention. I think there is a kind of corollary thing on particularly the smaller firms where doing that on a large scale is going to be difficult. But are we thinking that technology is probably the answer in trying to spot those more risky payments?
Yeah, what we're seeing already, which we really welcome, is a real uptick in the use of technology. But more importantly, I think the point here is about data sharing. So really recognising the value of where and how industry can better share data to make sure it's picking up on these things and preventing them before they happen.
That's what I hear a lot from the industry is the more data we're allowed to share and we're allowed to get a hold of, the better we will be able to fight this.
Agree.
Thank you. So next question, David, this one's yours, I think.
Yeah, but I also heard from Kate there very clearly, if you think it's a fraud, don't send the money, and you'll support, the PSR will support you to simply not sending it, despite the consumer screaming. Right. This is something that I think there's a lot of misunderstanding about in the market. The regulations, as my understanding it, say if I'm a consumer and I call up, and then the PSB says, well, have you reported to the police? I can turn around to them and say, no, I haven't reported to the police, and that's the end of the matter. But I understand from UK, actually, it's not quite the end of the matter. And I think this is really important to help prevent first-party fraud. There was a lot of concern in the market about this. So maybe you can just take us through, what can PSPs demand of their consumers, or what can they do to really address this real, and it is a real concern of many parties, that there's going to be a lot of first-party fraud. We haven't seen it yet. There was a lot of concern it might happen, but what can they do?
So this is a really, really important point, and I do worry a little bit that firms may have sort of skated over the balance that we've tried to strike here. So let me try and really draw out what it is, because we absolutely believe that the more fraud that is reported to law enforcement, you know, the better data set, the better prevention, the better, you know, intervention we're likely to get in closing down some of these fraudsters. So reporting to law enforcement is a good thing. I think we can all agree on that. However, there will be some situations where a consumer, for example, doesn't feel comfortable doing that themselves, or indeed isn't able to, or doesn't know how to, or, you know, there are several things that we don't want to stand in the way of a consumer getting reimbursement. So the balance that we've struck here, which we think is a reasonable compromise, and it's in our customer standard of caution, consumer standard of caution, I should say, is that we have said that a PSP can reasonably expect a consumer, if they're requested to do so, to report an app scam to the police or another relevant authority. Now, if the consumer is reluctant to do that, the PSP can offer to report to law enforcement on the customer's behalf for them. Now, if the consumer refuses both of those, so say I'm reporting as a victim of fraud, and I say to you, David, I don't want to report this to police, and I don't want you to report this to the police, I think if they did that, and in doing so they were being pretty negligent, or let's say grossly negligent, because that's the standard that we've outlined, then actually that is something that the PSP can take into account when they're deciding whether to issue a reimbursement. So, and it's possible that there are legitimate reasons why you wouldn't want the fact that you're a victim of fraud to be reported to police. But I would encourage firms to really, you know, question that and really talk to the customer about, you know, it is in their best interest and everyone's best interest if either the firm or the consumer report the fraud to law enforcement. So we think we're striking a reasonable balance there. And, you know, if we do think the consumer is not behaving reasonably in this situation, and they are doing so with gross negligence, then they could consider that is a rationale, or part of a rationale, to decline reimbursement. Now, listen, I don't want to make any sweeping statements on that, because every case needs to be judged on absolutely the detail of every case. But I think we've got an important tool here, really, and this is an important conversation with the consumer, because you would wonder why someone didn't want you to report it to the police for them. It's possibly an indicator of first-party fraud. It's not definitely an indicator of that, but it's something we would want firms to think about.
So key things I'm taking out from that is, one is you can ask the consumer to do it. Two, if they don't feel comfortable doing it, you can offer to do it from their behalf. If they really insist that they don't want it reported to the police, you can take this into consideration when understanding the overall whether it is a fraud going on or not. It's not a definite yes or no, but it can certainly be very much taken into consideration. And the mere offer of reporting it to the police should elicit a positive response from most consumers when it's explained, because obviously it's helping everything else and getting a police number on it and everything else. So therefore, it's something that that companies can use to help combat any potential first-party fraud. Is that a reasonable summation?
I think that's right, David. And I think, we do need to make allowances for some consumers if there are perfectly understandable reasons for them not wanting to report to the police. But yes, those are questions that you would definitely ask and consider whether the consumer is being grossly negligent in that case.
Thank you. I think that's very clear to everyone now, and I think hopefully that's clear for the audience as well. Certainly it is for me. Next question, please. Right. I think there's a batch of questions here that sort of come together. One of them, as the first question says, is, and Chris has already highlighted this in terms of the workload, that is it really fair? Because it seems to be putting almost the same obligations on smaller companies as it does big. And bluntly, as a smaller company, you don't have the money and the resources to put behind it. So simply, are we being fair? Are we being proportionate in this?
Okay, so I got some bad news here, David. So I'm not going to sugarcoat it, I'm afraid, because we do get asked this question quite a lot. So is this proportionate? So if you have had a chance to look at the data that's published on our website, we've published twice now an annual report which sums up in the UK where APP fraud is being sent from, where it's being received to, which firms are doing well at reimbursement, which firms, frankly, are doing well at making sure they don't receive too much fraud. Now, the bad news in that, I would encourage everyone to have a look at that report. But the bad news in that is if you take out the bigger banking groups in the UK, so if you take out the biggest 14, which are all the big and medium-sized firms in the UK, if you take them out of the equation, the smaller firms, many of whom may be on the call today, account for only 8% of the traffic in faster payments. So you would say, right, they're quite a small proportion of what's going on.
Less than 10%.
Only 8.
Yep.
Oh, less than 10%. So shouldn't they get an easier path? But the bit of bad news is that the problem is that set of firms, the 8% of the volume, are actually receiving more than 50% of the fraud in the system.
Wow.
They're receiving 53% of the fraud, and that is something you can see very clearly in our data. So we're very clear that that is a problem that needs to be tackled, and we don't think it would necessarily be fair for bigger firms with deeper pockets to foot the bill where smaller firms are not doing their bit to make sure that fraud is not received. So hence we have designed this policy to absolutely incentivize a firm, whether it is small or large. And we know that there are some real issues in there that need to be tackled on the smaller side of the market.
So in simple terms, small companies, low percentage of overall volumes, but, well, 10 times the amount of fraud they should have going through there. So therefore, whilst it might be a bit one-sided in terms of unfair on them because they're smaller, they're also getting more fraud, so they need to address the issues. It's the bottom line. And
we know that fraudsters target, the weakest links in the system, right? That is what fraudsters do. So, it isn't really, surprising that we do expect all firms to have a sort of a minimum standard of making sure that they are doing proper due diligence and make sure that they're not, accepting fraudsters and letting them transact through the payment system. So, this is a measure that we do hope will help to tackle this across the board.
Okay. I'm going to sort of then, because I can see where you're going with this, and ask question 7, 8 maybe slightly differently, therefore, in terms of, given what you're saying, that the smaller companies have the wrong side of the percentage of fraud going through them and therefore need to address it. There is still a risk that it affects their ability because of capital to innovate, get funding, competitiveness, attractives of fintechs and economic growth. You've talked about evaluating the whole program as it goes on. I'm assuming that this will be part of that evaluation, in fairness, then, because I can understand why you're doing it, but we also need to say what the impact's going to be. Is that only fair?
Yeah, it's absolutely fair. And this is absolutely something that, indeed, we considered quite strongly when we were thinking about the limit prior to implementation as well. But there's a couple of things I will just add on that. So yes, we need to understand the impacts that the policy is having, and yes, that is appropriate that forms, a part of our evaluation. One thing I will say, though, David, is that we haven't seen a credible argument that not tackling fraud or turning a blind eye to fraud does actually make the UK more competitive or indeed a more attractive place to do business. We do think that in tackling fraud across the industry, actually it's going to make the UK more competitive and a better place to do business. So, that's also at the heart of our policy. But I have to say, the PSR, our statutory objectives, the whole purpose of us being here is to promote innovation. And so, we do have to be mindful if there is any impact on that innovation. But I think, our incentives create and encourage PSPs to do better, to prevent fraud, and that is encouraging innovation in that market in particular, which we think is super important. So as a regulator, that's what we're here for. It's something we will firmly keep an eye on. But I think we've got to accept that a landscape that has too much fraud in it is not going to help anybody in the UK.
Look, I think that's all we can ask for, is that at least it will be evaluated as part of the evaluation process and considered. So if people have got evidence, they can submit it to you and then comment further on it when it comes to it. Next question, please.
So very much on the same theme about reducing fraud overall. The Payments Association did a sort of documentary film earlier in the year where there was an interview with a criminal who essentially said there's very little enforcement. There's incredibly little chance of actually being picked up. To that end, to what extent is PSR working with government to try and tackle the criminal side of this? It is, after all, a crime, to try and get more actual convictions and create more of a deterrent to the fraudsters in the first place.
Yeah, so obviously this is an incredibly important question for all of us to think about. I mean, we are very cognizant that prevention and deterrence and enforcement need to all work hand in hand if we're going to tackle APP fraud in the UK properly. So obviously, we work incredibly closely with the Home Office and with all of the bodies involved in fraud, and we've inputted into the Home Office's, fraud strategy. So we do work closely with government. I've already spoken, I won't go over again, I've already spoken about how important we do think police reporting is and the reasons for that, and that's why we fully support that and have supported that in our policy. But we do routinely work with government, police authorities and other regulators to make sure that we are all joined up in terms of fighting fraud. We do think there's scope to do more. You will soon see from us that we are thinking wider than the payment system. So you'll all be aware that the PSR regulates payment systems and the firms that use them in the UK. But we are starting to think now that our reimbursement requirement is implemented, about, okay, how can we go further upstream, look more at the root causes, about, how the fraudsters are, coming to create such terrible vectors. So So you will soon see from us, very soon actually, some data that we're aiming to publish on where fraud is coming from. So what platforms are being used, how they're being used. And you will see us talking very openly about the need for better data sharing across industry with some of these platforms where these problems are originating, and indeed with law enforcement. So, you know, a big theme of our work in 2025 is going to be data sharing to tackle exactly the problems, Chris, that you just talked about.
Kate knows my view about charging some of the telco operators and things about some of the fees, if we could.
Yeah. I mean, to that point, though, I mean, all of that makes complete sense. It's very encouraging. It doesn't actually go, or maybe it will, to the point of funding and resource. That the statistic I've heard in various different forums about fraud being 40% of the crime that's reported, but has 1% of funding or 1% of the police resource to tackle it. Is that particular aspect something that you think needs tackling in order to tackle app fraud and other fraud more generally in the payment system more effectively over the next decade or so?
So I think the thing we can do, if I'm super honest, Chris, the thing I think we can do better is share more data better. And actually, I think that will drive some efficiencies. You'll understand, it's not my job to determine the kind of relative priorities of police forces in the UK, so I can't really comment on that. But what I can say is that in the course of our work, we have found areas where better provision of data, better joined up data, would actually make this fight against fraud and fraudsters a lot easier. So that's the thing we really want to champion next.
Thank you. Next question.
Okay. Again, this comes down to, this sharing of data. And I think a lot of the industry is out there saying, can we get more data sharing? There's all sorts of GDPR issues and all sorts of other things around it, which is why it's almost got to be regulatory led. And there's a feeling maybe we're just not moving fast enough. I mean, we are hearing as well that from a question just in, that some people are saying, oh, they go and try and report it to the police, and the police are just saying, oh, no, just go and report it to the bank. We don't want to know about it. So this whole issue of data sharing, getting the police on board, I think is really quite important. And enforcement and prosecutions and things like that. It'd be good to understand where the PSR's thinking is, but also, how fast that can move forward, because that's the other side of it. If we do find the bad people, we need to actually be punishing them.
Yeah, and I guess, David, what I would say is that does, so we in the payment systems do have access to a great deal of very, very valuable data. But just to share one small anecdote with you, in the course of putting together our policy and thinking hard about what can be done about this, we were finding instances where a sending bank who was perhaps, say, a member of the CRM code, who was, receiving complaints from a victim about fraud, was reimbursing, but perhaps either weren't letting the receiving firm know that they had a fraudster banking with them, or they were letting them know and no action was being taken. So this is all about both of those things that you say, right? This is both about sharing the data and taking action on the back of the data. So I am confident that what we've put in place now as our policy absolutely drives the incentives for firms to share information between them, to take action and shut down fraudsters' accounts very, very quickly. But I do think now the next step is to make sure that we're doing that more widely. So as I've already mentioned, thinking about the upstream platforms that are being used by fraudsters to attract victims, and making sure that actually, we can do more with the data we already have, what we already know about the ways that these fraudsters operate and the data we already have on them to stop things further upstream.
Okay. I think there's just a a real desire to share more data out there in the industry if a structure could be formed to enable it to happen in some way. And I think that's an honest answer from the industry. Chris, would you agree?
Well, I mean, the things that I've heard a number of times are for why people don't report it more. As David says, it's GDPR. That they're not sure that they can. It's a little bit difficult to kind of squeeze that that data sharing into the existing GDPR regime. So personally, I think kind of clarity on that would be great. The other part is just resource. So unless and until what I hear is that unless and until there is a regulatory obligation to share data either with other PSPs in the chain and with the police, it may not happen. Certainly on the police side, I don't think it's going to happen. So it's great what you're saying earlier about who can report and is that a factor in making the payment or making the reimbursement or not. But there may be value in looking at a mandatory obligation to report to the police in a particular format, something that is relatively simple to implement, for instance.
Yeah. And we've got a similar question coming in, actually, Chris, on that, which was, and if I can read it out. So is the policy of not requiring police reports at odds with the regulator's agreement that there needs to be greater enforcement?
So just to be super clear, I don't think I've outlined a policy that doesn't require police reporting.
That's what I was, that's why I asked the question, because I think there's been a misunderstanding there. Again, this is why we kept on saying that we need to be really clear to everyone. Yes.
Yeah. So as I said before, you know, it's perfectly legitimate for firms to ask consumers to police report or indeed to ask if they can do it themselves and think hard about whether that's gross negligence if that isn't happening. So, I mean, we talked about that earlier. So no, I don't think that's at odds. I think we are entirely of the view that police reporting is a very good thing and incredibly helpful, and the more of it, the better.
Great. Thank you very much for being really clear on that. Let's just be really clear on this. You, as a PSP, can ask consumers if they've reported it. The answer comes back no. You can offer to report it on their behalf. If they don't want you to, you can take that under consideration on whether it's a first-party fraud or not. But you can ask them if they've reported it and even encourage them to report it to the police. That's correct? Yep.
Correct.
Good. Just in case anyone's listening verbally and didn't see you nodding. Right. Next question.
Okay. So obviously a lot of this fraud is enabled or facilitated by a fraudster having an account into which to receive funds. You're talking about the data that you've got about where the fraud is happening. Do you intend to work with the FCA to have specific intervention reviews of firms where you're spotting more of this happening?
This is a great question. And this has been one of the huge benefits of our work, right? Because the FCA are working super hard with individual firms to make sure that all their controls are up to scratch. But actually what we have found is that in sharing our fraud performance data, which we have already done, obviously, working closely with the FCA, we are a subsidiary of the FCA actually. So, you know, and we're in the same building. So it's relatively easier for us to find, you know, good rationale and legitimate legal gateways for us to share data with the FCA. And so in sharing our performance data with them, so that's some of the data that I've just talked about that was on the website, which shows, you know, where fraud is being received and what particular firms are attracting a lot of fraud. And that has allowed the FCA to take some very, very specific action on some of those firms. So we've already seen that. And we do continue to work with the FCA. I mean, there is lots of things that they know about firms in their supervisory activities, which we can benefit from, and lots that we are better understanding now the reimbursement regime is in. So the data that's collected by Pay UK or in the UKF system, which actually can absolutely help that supervisory practice and help to see where there are weaknesses in controls and where there are particular firms that need to do more. So you're absolutely right. This is really important. It's really important that these two regulatory strategies are completely joined up, and that, you know, one benefits from the other's interactions, and that is exactly what we have been doing, and we will continue.
Wonderful.
Thank you.
Right, and we're actually moving on to the final question, Kate, at least final question from us. Okay. Now, I'd stress that to the audience, that if you've got those questions, please keep them coming in on the Q&A, the bottom of your screen, not on the chat, please. So if you've got more questions, we're about to go over to that. Certainly, this is one that I got fed into me from a number of people, and a couple have said that, you know, there seemed to be a wide differing interpretations from people, almost late communication coming out from the issuers around app frauds, in terms of, you know, one PSP would say this, one bank would say that, and it would always differ slightly. And it seemed to be, for some consumers, you know, when I talked to an older person, it was almost a bit confusing. They suddenly got bombarded with all this stuff, and all of it was sometimes slightly different, and certainly said things slightly differently. And I just wondered if the PSR's plans to issue any guidance on how people should talk to consumers, or you think it's something that's now gone and happened, and therefore that I'm just concerned if the levels change again or something else, they all get bombarded again, cannot have a consistent message going out there.
Yeah. So, I mean, our ultimate aim on this, David, would be that, you know, the reimbursement requirement is part of the T's and C's of firms. So, so when they do a next reissue of their T's and C's, that this would be firmly in it, and that, you know, on an ongoing basis, if any changes are made, then those T's and C's or notification of the variations are used as a standard practice in the industry. However, we did want to make sure that consumers were aware ahead of the reimbursement requirement coming in on the 7th of October. And so we did ask firms to communicate. Now, part of that sort of little bit of a last minute rush, David, may well be down to the fact that we did make a change to the reimbursement limit. So we changed it from 415 down to 85. And that was only around about a month before implementation. And some firms, quite rightly, may well have held off communicating the detail of the policy to their consumers until that change was actually confirmed. So, you know, we do have to take account of that. We have to take account of it. We did want people to communicate, and also they may have been in a position where they needed to do that relatively late in the day. What you say about different communications doesn't surprise me necessarily. There are different ways to implement this policy, and it's always up to a firm, you know, to interpret the regulation and how they operationalize it very different. A good example of that is that some firms may choose to implement £100 excess, and some firms may choose not to. And in fact, we do see a disparity in firms using that £100 excess or not using it. I do accept that might be a little bit confusing for consumers, and that they may have had quite a few communications, and their firms may have done it differently. But the most important thing that I do think we've landed quite well, actually, is that this is a big step forward. I mean, there's been lots of media, widespread publicity, both by the PSR and the government. There's been lots of broadcast, lots of print media, online, and, you know, we've been lucky enough to be featured quite a lot talking about the new reimbursement requirements. So, you know, it's all good publicity, and it's all good to share knowledge with consumers about how the regime has changed in their interest.
Right. I think that's it. Chris, we're over to the audience questions. I want to pick up on one that has been answered directly, actually, but I want to pick it up because I think it's a fair comment. It came in from someone after we were talking about merchants and contacting you, and someone came back and said, what's the SLA for responses or whatever? And I think people are just concerned, if they email in, is it going into a black hole, basically? So not expecting, you know, yes, you'll get an answer in the next time, but what's the general, you know, will get people be got back in touch with if they write in, these merchants, saying this is what we're experiencing? Will someone actually get back in touch with them to have a chat, or to at least say, look, we've taken on board your comments or whatever? So I think rather than going, they're just concerned it goes into a big black hole and they never hear anything again. So they like to feel it's worth the effort, if that makes sense.
Yeah, so definitely not a black hole. you will hear from us. I'm going to ask Ben to help me out with what the SLA is. I am absolutely sure there is one. But yeah, we as a regulator are absolutely on the hook to make sure that we respond to those things that are raised with us. So hopefully Ben can give us the precise SLA, but definitely not a back hole is my answer to that one.
And I think that's what people are just concerned about. Yeah. So you are really honestly interested in understanding these views we talked about of this collateral. So that goes back to the audience. Chris, over to you for the next question from the audience.
So once come in, is there currently a standardized template or framework for reporting APP fraud cases across financial institutions? If so, does it specify the level of detail required for effective analysis and resolution?
So just let me understand that. Sorry, Chris, say this first part again. Is there a standard way? Is that communicating between sending and receiving PSPs when there is someone's reported a fraud? Is that where this question's going?
Yes, that's right. That's right.
Okay, fab. Very interestingly, this is a point that came up last week in our conversations between UK Finance, Pay UK and the PSR, and it's something that we're quite interested in. So clearly at the moment, there is a number of different ways that you can communicate. You can communicate with one another using the BPS system, you can use the RCMS system, and if you're not using either of those, you can also use email. I think one of the things we're quite interested in is whether Pay UK as the payment system operator should be really standardising that information in its exchange so that it's facilitated in a really straightforward way. That seems to me like a very sensible idea, and one I must admit I only thought about for the first time last week, but it is something that was under discussion, and I certainly hope we could do something to help on that.
Okay. Next question. The questions come in. I'm going to read this again because I want to make sure I've got it correct. Looking at investment scams, shouldn't there be a minimum of due diligence that the customer would be required to do? The point is, customers are getting promised 50% return versus a current bank interest rate. So that's the question. The way I read that, and I sort of understand, someone's been promised great returns, they'll say, yeah, I'll take a risk on that because the worst I can do is I'm going to get 50% back, basically. And the best is going to do, I'm going to make 150%. So, hey, why not just take a punt?
Yeah, something about it sounding a bit too good to be true, which I do understand. So this is quite a tricky one, and again, it's a thing that we've considered in the policy to try and find, the right balance. What we're trying to do here is make people have confidence in the payment system and confidence in the firms. So if there are illegitimate investments, then, we would hope that both the industry and indeed the customer are able to spot them in the best way and stop payments going to these firms. But I don't think, honestly, David, it's as simple as saying, shouldn't the customer know better? Shouldn't they know better? Well, shouldn't we all know better? And haven't we all got a part to play in this? It is quite often the case that the firms on either the sending and receiving end, don't forget these institutions who are offering, let's say, scam investments, they've got a bank account and somebody's allowed them to open a bank account, and there's maybe more we could do there.
So there's in fairness saying the receiving bank could do a bit more, maybe checking what the account's being used for.
Exactly, and seeing exactly what is going on. And so, quite often it is the case that the banks might know more. They might be able to understand more and exchange more information before that payment is made. It's also the case that, social engineering has a massive part to play here. And whilst it's very easy for all of us in the cold light of day to say, of course, you're not going to be able to give me 50% return on my investment, actually some of the very sophisticated techniques that fraudsters use to dupe their victims actually, go beyond honestly making them think realistically about what they're doing. So these are victims of fraud who are being preyed on, and I think we've all got a part to play in trying to stop that. I worry a little bit when we constantly ask this question, shouldn't the customer know better? Shouldn't they know better? Shouldn't they check more? Shouldn't they be expected to do this? And I guess I would just come back to the point I made earlier. When you make a payment with your card, with your Visa card, or with your MasterCard, or with any other card, is it up to you to double check that what you're doing is legitimate? Do you have to go and check a register or company's house? Is that an expectation on you? We don't talk about that in other payment systems, and yet we are talking about it in this one. That tells me there's something very wrong, that we're letting the wrong people use the payment system, and that's what we're trying to avoid.
Chris, over to you.
It's an interesting point, Ken, and it sort of feeds a little bit into this next one. I think a lot of it's about disputes process, and my sense is a lot of people aren't as aware of the disputes process they may be. So we had this question come in as maybe more of a point about kind of future thinking in nuances to the policy over time. As a small firm, we mostly receive claims from large banks, where the banks are just accepting all reimbursement claims. You were talking about increasing the due diligence of on the transactions, but what can we do if a high street bank is accepting every claim? We don't have the resources to go through dispute processes day in, day out. The policy may have the effect of just eliminating small firms, which does not respond to the idea of improved competition.
Okay, so I think this is a really interesting one, actually. So there are mechanisms in the policy before the reimbursement is accepted for there to be communication between the sending and receiving bank. So we've got a stop the clock mechanism, we've got the 5 days. So I'm really interested if what we're seeing is a kind of a unilateral decision which hasn't given the chance for the receiving bank to actually investigate their end and work out what's happening here. And I'm really very interested in that for two reasons. One, because actually I absolutely want the receiving bank to know if they are banking a fraudster or not. And if they feel they're not, then they need, to be able to say something about that. So I worry about a little bit about this one, because I do think that we need to be able to operationalize this dialogue and make sure we are understanding exactly what's going on in each case. And I do accept that might need and require some resource commitment up front. And that is a necessary consequence in order to make sure we are spotting the legitimate fraudsters, but not taking action where it's not legitimate fraud. So it's difficult for me to kind of say anything more than I would really, really hope that the way we're operationalizing this gives a chance for that dialogue to take place properly. And if it's not, is there anything we can do to make it sure it does?
That's the thing that's come up in a handful of the questions has been looking at them. So one of them is, well, it's the sending PSP that kind of makes the decision. It seems to happen kind of unilaterally. The other one is a little bit of uncertainty about what the dispute process is, how to access it, etc. So that maybe there's something to think about on that front. David, over to you.
I'm going to follow up with one I think fairly similar, which is we've faced challenges here sending PSPs not documenting enough details of the investigations done, and when we challenge the same, we do not get a concrete response. So it's again this data flow, this sharing of information, maybe there's a format that needs to be issued so that everyone has to complete it. There's a real seems to be some challenges, some grit in the wheels here, that not everyone's trying to do it the same way and the same thoroughness.
Yeah. So very interested in that, and in making and in what we can do to make sure that this is happening properly. That dialogue is really important. So
can we ask people to reach out to you on the contact email if they've if this is a concern of theirs? Can they reach out, Kate, on that contact and say, this is what we're seeing, happy to have a chat about it, basically? Would that be good?
I do think that would be good. I'm just thinking through whether that would be one for Pay UK as the owner of the rules, though. I think the one we talked about earlier, the reason I said come to the PSR for that one is because we're going to be evaluating secondary impacts of the policy, and access is something that we need to think about. This one feels much more like it's in the mechanics of the operation and making sure that the process is working. So whilst I wouldn't discourage you from raising groups in the PSR with the PSR, I do think this is probably one that Pay UK, who own the rules and the operational processes, could probably help us with.
But you would like to be aware of it?
I'm happy to be aware of it, but I will probably say, what's Pay UK doing about it?
That's fair. Chris, over to you. We're running out of time. We've got about another 10 minutes left. We've got still a few questions to get through.
So we've had one, can we expect guidance to be issued by the PSR or FCA on what steps PSPs can take to protect customers against APP fraud?
On what steps?
PSPs can
sorry,
take.
say it again. PSPs can take.
The PSPs can take to protect customers against APP fraud.
I'm interested in whether there's something specific they've got in mind. I would like to think that we've been very clear in terms of the things that we think firms can do more of. So making sure they're doing good due diligence on new accounts, making sure that they've got the right controls, the right monitoring, the right ways of spotting problematic or potentially problematic payments, the right ways of intervening, pausing, investigating, the right ways of approaching customers and discussing with them. So I like to think a lot of that is already out there, and I've already talked about, if a firm really thinks it's a fraud, then not sending the payment is a legitimate thing to do to protect the customer. So if there are ideas about what more we could bring in terms of clarity, I'd be very interested in
that. Question. Further to the question on the £100 excess, would the PSR consider publishing data on which PSPs are applying the excess so there is transparency to consumers on where they may be subject to this? I was going to say that's a really good question. I'm glad I don't have to answer that one.
So we're a big fan of transparency. You will see that from the reports that we publish on our website. I absolutely think that usage of the excess will be part of our evaluation. So I can tell you two things. I can tell you we will be looking at who's using it and who's not. And I can tell you we will continue to report as much data as we can on our website. I can't confirm whether we will be able to publish that piece, but I think it's a really interesting question.
Thank you. I think that's an honest answer, although not a definitive answer, to say it's under consideration and subject to various matters. You'd like to do it, but we're not sure as legally we can, but we'll come back to you on that. Okay. I
would want to have a think about it. I would want to have a think about what that might do, but it might be good. It might well be a good thing.
Okay, but thank you very much for a great question from the audience. Chris, over to you.
So I've got one. So under the So it's PSP that's getting ready to launch under the app fraud scenarios where the receiving firm has successfully intercepted the fraudulent payments and the funds remain fully recoverable. What authority does the receiving firm have to debit the fraudster's account in order to repatriate the funds to cover the app fraud claim? And it seized them, basically.
really good question and beyond my technical expertise. I do think there are provisions to allow you to do this, but I don't want to comment because there is a big chance that I will get that specific.
Should we ask them to write in specifically? If we ask them to write in, Kate?
I think this might
It's one
well
that Ben's already answered, but yeah.
Oh, is it?
Yeah.
Oh, Ben's ahead of me, is he?
He is. So there's some nuances around deducting the assets, but that's exactly what Ben suggested. Write in, give us some more detail. But I just thought it was quite an interesting general principle, because if you know the funds are fraudulent, and the receiving account is fraudulent, should you be able to get hold of them?
Yeah. I think the answer's got to be yes, but let's
if it weren't, yeah.
Yeah. So with that, Kate, we've actually pretty much come to the end of the questions. Other than I thought the best question we left till last, which is someone's basically saying, can we hold another one of these and get Pay UK on the same call, please?
Let's go ask that one as
well. Maybe that's something we'll take under consideration as the TPA. Certainly, we'll always welcome the PSR onto these, and by the sound of it, there's been a real demand for it. So maybe we do look at scheduling one of these again, in the first quarter of next year. Maybe we see if the Pay UK would be willing to join as well. Again, all about busting myths, getting it clearly out there and what the facts are. Kate, we've got a couple of minutes left. Is there any final comments that you'd like to make now, given everything you've heard and the questions you've heard coming in? Is there any final comments from you that you'd like to give to the audience?
So I just want to sort of repeat my thanks at the outset of the call. I know this has been a material change for firms to step up and make, material changes to their operational processes. So huge thanks for the way that you have embraced this, because I do think that, the policy, we can already see the policy is starting to really help to drive the right incentives and reduce fraud. And we're seeing some great solutions out there as well. So my thoughts are thank you. We're starting to see it work. That's absolutely brilliant. But also thank you for your engagement today, because it is through conversations like this that we understand what real life is out there, and we start to understand whether there are any particular things which really need a bit more attention. So this has been a really helpful dialogue. Thank you to David, thank you to Chris, and thank you to everybody who has joined and asked us those questions today.
Well, no, the Payments Association is really pleased and really happy to help, get these myths busted out there, and get the key facts over, because it is about, if we have better understanding, then ultimately we have better implementation and understanding of what the policies and everything are trying to achieve, and therefore we end up with better results for everyone. I think there's been some really good audience questions. If we can all put our hands together for a virtual round of applause for Kate, for being, by the way, incredibly open and honest. Oh yes, we're getting some of these in already. Incredibly virtually honest and open with all of your answers, and incredibly helpful to take those from the audience. So plenty of congratulations coming in. So thank you very much. Thank you to our audience. Please feedback to the TPA if you've got any other things. I know there were non-members here as well. We look forward to welcoming you soon again. If you've got any further questions, please don't worry about contacting the TPA, or as we stress, and I'm going to stress it, contact the PSR inbox. Please stress in your subject line what it's about. They will try and come back to as many of you as soon as possible, at least to recognize your questions, but if nothing else, to understand what's going on in the industry. They really are interested, so it's up to you to tell them. They're not telepathic. Thank you very much.
Very much.